All right, welcome to another Futures Initiative Trading Recap. Tonight we got a special guest, Big Pockets, and as always, Dubster. So today was an interesting day. We had a lot of great price action. We lined up our strategies really well today. We were in sync in our trading plan, and we had a lot of great trades today. So I'm gonna go ahead and let Dubster take over and get this thing rolling. The floor is yours, my guy.
Awesome. All righty. So we're going to go ahead and start with NQ and pretty much stay in NQ. I really did not take much from ES today. I did have it charted out. I did a couple 15-minute inverse fair value gaps and a 1 hour healthy order block that did not get hit today. I did not take this trade. I did have it charted. I want to see what was going on. But the reason why I stayed away from ES today was because I saw these liquidities here, sell side liquidity on this specific section here. And Quantastic and I were actually talking about this during this time when price action was around this specific area, around 43.86 or so. And we were talking about, I was just asking him questions if, what do you think, what was his point of view during this time about these liquidity grabs down here? And I just figured there might be like a very strong section where or area where price action might come down to. So I went ahead and I stayed away from this specific section on ES and only traded NQ today. But as you guys, hopefully if you guys saw the recap from yesterday, you guys will understand something that we talked about that I'm gonna go ahead and explain about today. We're gonna go ahead and start with the first trade only first though. As you guys can see, Quantastic went ahead and alerted this trade to the downside. I was a bit hesitant. The reason why I was hesitant is because on the 1 hour, as you guys know, I like playing off the healthy order block, and there's really no healthy order block on this specific section here, right? I want the top part of the mountain candle, but there's no fair value gap. So this is an invalid healthy order block for me off the 1 hour. Went ahead, dropped down to the 15 minutes. And when we dropped down to the 15-minute, I saw that there was a healthy order block here. There was a fair value gap here, but it was off the 15-minute. So I was just a bit hesitant because I normally play off the 1 hour. So once price action came up to this fair value gap here, I figured it must have been on inverse fair value gap. So this had to be like a short fair value. And I actually did not take the bounce immediately. I went ahead and let the play move on forward. As I dropped down, I went ahead and jumped inside. When I jumped inside the trade, the reason why I jumped inside the trade was because of this specific candle right here. The indecisiveness of this candle just said, you know what, it's most likely does not want to go back up. So I went ahead, jumped in here with 5 micros. Stop loss was about the above about of price action, these highs, and went ahead and wrote it down. Luckily for me, it never actually went red. This thing just kept dying. Little did we know, final target, profit target for these runners were 203 ticks, I believe. So this was a really good trade today. So we're going to go ahead and move on to something that we were talking about yesterday. Quantastic and I, we always go back and forth regarding the healthy order block and the inverse fair value gaps off the 5-minute and the 15-minute. So I have different zones here. I have a 15-minute healthy order block on this specific GAN box in this section here. I have a 5-minute GAN box for the final fair value gap off of this 1 hour healthy order block in this specific section. And then I have a 15-minute GAN box off of this section here. So we're going to go ahead and show you the 1 hour. So this is just an experiment that we did today, that I did at least today. And I actually did take these trades. I didn't take the middle one. Quantastic took the middle one. As you guys can see, this 1 hour one right here, the reason why this 1 hour is my healthy order block is because we have a fair value gap here, right? So we know that price action was around this specific section here. So the question here was, is it going to go up here, grab this healthy order block on this specific section, or is it going to come down here and grab this healthy order block on this specific section? You never know, right? So luckily for us, price action came to the downside. Went ahead, we took these puts down here. Price action was going down. As it went down, the question here is, what am I going to do? Am I going to go ahead and take this whole massive stop loss here, this entry point off the 0.5, and have this massive gap for stop loss? or should I go ahead and play what we talked about on yesterday's recap? So instead of having this massive dot, I just went ahead, changed things up, and I dropped down to the 15 minutes. We'll go ahead and start out with the 15-minute. I'm going to delete these real quick, and I'll show you guys. On this specific section, we have a 15-minute fair value gap, right? This is a healthy order block. Reason why it's still fair value gap. We're going to go ahead, take them to the side, pull them out. I went ahead, I entered this specific trade here. I went ahead, entered off the 0.5. Stop loss was below the fair value gaps, a couple ticks below it. And my target was a 2-to-1 ratio. So as you guys can see, 2-to-1 ratio was here. Unfortunately for me, when I took this trade, I actually took this trade. It went up. I had to leave during this time. So as soon as I was bouncing, I saw 50 ticks. I took my first trim and I put my stop loss at break even. By the time I got home, I was out of the trade already. And Quantastic was already inside this trade. So one thing here is that the trade did happen. But as you guys can see, when I entered this trade, we went green, we went red, we went green, we went red, and then we went massively green. We hit our TP, and then from there we would have been out of the trade. But now once did we go super red? So the question here is, would I, if I would have sitting in my desk at this time, would I have hold red the whole time? When we went green, I trimmed 50 ticks and then would have let this trade go red and then continue the green side, or would I have not? So that is just something that I know for a fact. I told myself in different recaps that I was gonna let the trades go red because I have to trust the system that we're going through. But in this case, I put my stop loss at break even after I trimmed 50 ticks, and I actually got stopped out. This is the section right here. We're gonna talk about this one right here. We're gonna drop down to the 5-minute. This is something we talked about yesterday. We had said that it's better to just go ahead and let the fair value gap fill. And our entry point was going to be the bottom part of the fair value gap, right? I'm going to go ahead and put a dash, a little line right here, horizontal line. And as you guys can see, it just wicked us in. This is a play that Quantastic took. It wicked us in and then took off to automatically to the upside. So this was an outstanding play here. I personally did not take this play. I was not at my desk, but just based on the recaps that we did yesterday, this was an awesome experience to just see that it actually happened today. And it's just something that I'm going to go ahead and forward test later on. One more thing here is that we're going to move on to this third trade. As you guys can see, the entry point is on this half. What I did here is that I didn't want to do the 1 hour healthy order block 0.5 entry. Reason why is because I had already taken this entry. I went ahead and I dropped it down to the 15 minutes, used this healthy order block entry point off the 0.5 due to this fair value gap here. And as you guys can see, 0.5 here. We went ahead, entered this trade, and it went to the upside almost instantly. Pretty much instantly, we had some red at first. And then we went ahead and got a 2-to-1 ratio. Stop loss was a couple ticks below these the low of the healthy order block, and we had a 2-to-1 ratio right above here. So we did have profits here. What do you think, Quantastic?
Very nice. So a couple things. One thing, it's great that you actually looked for the inverse fair value gap. We saw it play out. We saw how you could take it early, and you saw what 90 ticks, right? But then when it came back against you, that's when it took you out of the play.
Yes.
So by adding in that 5-minute confluence and allowing that lower fair value gap to fill, we then saw over 240 ticks.
Yes. Yeah, from down here.
Right. We actually alerted calls on QQQ at that exact same time.
Yes.
And those ran a ridiculous amount. So that was awesome to see that. Ultimately, yes, we did head lower, and that's fine. But it was great to see, hey, this works. We can trust it. Win or lose, we're going to take it. And that is something that I'm very proud of you for implementing. I know it's something that we've talked about for quite some time. It's something that we both have struggled with, kind of going back and forth. Oh my God, it's going red against me. Okay, no, we're in the green. Oh no, it's red. Oh no, we're in the green, and now it's red. And then we kind of psych ourselves out. But
Yeah.
keeping our emotions in check and keeping our heads screwed on straight, we took the trades and we were very profitable on it.
Yes, and we've seen these before on a couple other recaps back. I don't know if it was 3, 4 weeks ago or a month, but we've been on trades like these where our trades normally we enter in this section here, we go red, then we go green, but we don't go green to the point where we wanted to, and then we go back red. So we've dealt with these emotions so many times already that we've actually been live trading. We've been on these trades, and then you'll hear me. I'm like, oh, I'm up 70 ticks, and then I'm fucking down 35 ticks. And you've seen that. And I keep saying, I'm gonna hold, I'm gonna hold. And ever since these days that we've done those recaps, I actually started holding my red trades, even after my first trims, because of that reason, because I have to trust these strategies. I have to trust these plays to actually happen. Because even on my back testing, I've seen that they go red, green, then they go back to the negatives, and then it takes off because I never get the precise entry on that one candle's gonna take off, right? I play off the 15 and the 1 hour, so I expect things to go pretty either red and green for quite a while since my plays take a while to pretty much pop off. But that is just something that I was just wondering today because I actually left the room when I was in the trade and we were in live call during that time. And I said I was going to take it. It was my strategy. And I went ahead and I took those calls, right? Now, and then I walked away. But that is just something that I was really proud about today. The fact that it was my strategy. I took it and I had to accept the consequences no matter if it was going to be green or red. Luckily for me, it was green. Did I take full profits? I did not. My highest trim was 50 ticks. My highest ticks that I saw I win was 93, but I wanted 100 ticks, so I never took it, and I got stopped out at break even instead.
You know what? But it's still the fact that you trusted your strategy is a huge step in the right direction.
Yeah.
So,
So
overall, great trades. You know what? We had a hell of a day today, and it was good for us to share our confluence in a live call so that we can actually see what each of us were looking at.
yes, yes, that wasn't too bad.
Very, very nice. Well, Big Pockets, do you by chance have any questions thus far?
No, I understand everything. That level that you guys were talking about, where you got that big bounce, that was the exact level that I had identified that I was telling you about.
Right.
That I couldn't really pull the trigger on, because of the kind of trend down that everything was going in. But it was good for me to confirm that this, like, at least I had recognized where the imbalance was, and that I had called it out right, even though I didn't take the trade.
Well, you know what? But that is the start of the process to understand your trades and your strategy better so that you can trust it.
Yeah,
Because win or lose, if you like when you trust your strategy, you're golden. You're golden. Because it's like, hey, you know what? Did I hesitate on it? No. Did I execute it without regard? Yes. Did I lose? Yes. But that is a part of the process. You have to lose. There
for
is no
sure.
100% winning strategy. So,
Yeah. I think
but
I think that's actually the lesson that I learned is, like, I made the analysis. I should, whether I'm a little bit hesitant or not, it's like, that was the analysis that I made. I thought it was good. I should take the trade, you know what I mean? Have my stop loss set. And if it doesn't go my way, it doesn't. In this case, it would have, which is a little bit frustrating, but like I said, I think the lesson learned is, like, trust your analysis, take the trade if you're confident in it, and then and just keep doing that and repeat the process, and you'll get better at it.
absolutely, I could not agree more. That's extremely good insight to have, and I think anyone watching this is going to glean a lot from that.
And I mean, that pretty much shows from this specific trade. That's exactly what I said when I was live with Quantastic at the time. I said, I'm going to trust my strategy. And I went in.
Yeah.
Quantastic said he was going to wait specifically for this to happen. And I understood that. I did not care. I said I was going to trust my strategy. I went ahead and took it here. So that's just, and that's something I've done right from the get-go. I mean, I love going against Quantastic and Tampa. For the most part, we are always targeting the same area. So that's a good thing, but there's just times where either he goes in early and I'm expecting for the downside to get hit before I jump in, or I jump in early and then he jumps in afterwards. And that's just something we've seen back and forth happen bunch of times.
It's very worrisome when you're jumping in before me. Now, because I'm known to jump in early, and I'm like,
Yeah.
wait. If he's not even in yet, we gotta start the timer, but before I get in.
Yeah. And that is true. You are always in before I get in. I always get in if we start the timer, maybe up to your second, your third average, and that's when I
Yep.
get in, right? But that's just me following the strategy because of the 0.5, right? You're always getting in at the entry points of certain fair value gaps, and I'm always waiting for this consequent encroachment to happen. That's the reason. But today, obviously, we understand why. Why? Because I played it off the fair value gap on a 50-minute, which is why I entered so early. But let's say, for example, we would go back to the 1 hour, and then we would have done that Gantt box off how my normal strategy works. I would have entered almost at exact position as you, because I would have entered here rather down here. You get what I mean? So maybe
Right.
I would have caught that trade, maybe I wouldn't. But
Right. But that drawdown you would have had to endure would have been almost 20 bars. Actually, it would have
yeah,
been 20 bars, which, from micros, that's not bad. When
yes,
you're trading minis, that's your account is gone.
yeah. And that's the thing. This strategy does revolve based on the fact that my micros allow me to have these stop losses.
Right.
And the fact that these strategies allow these huge runs are the reason why I've been pretty profitable on my accounts, because I'm able to hold these runs rather than me trimming as soon as I see 20, 30 ticks. I actually trim my first trim at 50 ticks, and then I go to 50, 50, and 50, and I add on every time. That's the only reason why I've been able to be profitable, because I trim every 50 ticks and not every 10, 15 ticks.
Yeah. Well, I mean, when you begin to leverage in, you can take the same plays as long as you can accept the larger loss.
Yeah, yeah, definitely.
Well, awesome. Awesome. All right. Let's get right on to it. All right. So here we are on a 5-minute chart. So we took a nice little trade up here, caught the downside a little bit, took a nice little scalp right down here. I saw this come right up to the breaker candle right here on the 5-minute, indicated that we're taking out the sell side. So I wanted to get in right about here. Wrong way. That is the right position to lose your account too. All right. Oh, look at that. Look, shows so much green, but I did not have that much green. So, yeah. So, did I wait for this candle to close? Absolutely not. I should have, but what I had done was wait for sell or this breaker candle to get taken. That was my entry point. So we entered in right up here, and about halfway up the candle. So not even the entire inversion, the entire inverse fair value gap, but just a little bit, right? I wanted to have a very short stop loss because I was playing with 3 minis. And we caught a nice trade, and I took it right down to the bottom of the hour fair value gap. 23 bars. That was more than enough for me. Each tick, $15. So 20 some odd 23 bars, 60, about what, 72 ticks. I'll take it. I will take it. I was done trading on my live account. After that, I said, all right, I'm locking my account. I'm good to go. Also took puts at that time, trimmed most. Then I got out of my play during this time as well. So we had a nice rundown. And I believe we exited the play taking at least 25%. Then we allowed price to come all the way back up here. Okay. I saw price come all the way back up because I knew that we needed to fill this fair value gap. We had to do it. So I started another put position. Right? We became profitable. And then this nice run up. This was beautiful. So I was talking with Dubs and others about this. You know, why is this wick significant? We didn't really take out a lot of highs, but we took out buy side liquidity on the near term. So now let's go ahead and go to the 15-minute chart. All right. So as Dubs pointed out, we actually almost filled a fair value gap. Let's go ahead and look at just the body of the fair value gap. Right. So this area right here is consequent encroachment of the fair value gap. Well, had we entered in right here, we would have had a bar and a half. I'm sorry, we would have had 2 to 3 ticks of drawdown. But obviously, if you're going to play off the 15-minute, you know, your stop loss must also be a lot wider. But since we were using an entry on the 15-minute, understanding that buy side liquidity was going to be taken on the 5. Actually, we also have the same fair value gap up here, but your stop loss is still the exact same. It would have been around 12, 13 bars. Still quite a bit of drawdown. If you're playing with minis, if you're playing with micros, that's nothing. That is nada. But it was up here that we averaged down on our options trade to give us an overall average of 0.43, right? We were leveraged in with 6 contracts to go all the way down for 116%. And it actually ran a lot further. But we ended up getting out. This was very tempting to take on my futures, on my funded accounts. And I said, absolutely not. We're not doing this. Because I've done that too many times in the past where, you know, I'm like, oh, but that's such a good setup. Ends up running against me. Lose one trade, then losing one trade puts me on tilt. And then I start losing the next 4 or 5. And next thing you know, I don't have a funded account anymore. So it's very important that we lock the account away. Actually, I disconnected it completely. I only allowed my simulation account to be connected, which I have no problem playing around with. So we took this trade all the way down. Then we saw it continue lower and lower. And throughout the day, it just got a lot. It just became a lot for us, right? Which gave us all of these setups. So we have been expecting lower price for a very long time. Now, I know I had said, I mean, this was on Tuesday. Yeah, we took this trade to the downside, but we saw the exact same setup right over here in today. So we took this all the way down, and again, like Dub said, oh, he was going to take it up here. or right around here, and that's great.
Yeah.
I think, you know what, you have your strategy laid out, you have it ready to go, fantastic. What I wanted was this fair value gap taken, because I understood that I was gonna have the least amount of drawdown possible. I had about 2.5 bars drawdown. So with that being said, I immediately got into calls. So I took calls here. I'm not even gonna, I mean, that stop loss was so dang short. But that play also had run well over 100%. We kept it, we let it go, and we said, okay, let's just relax at this point. Like, there's no need to continue going. But as Dub had noticed, he got in here, it came up, and then would have taken him out. Well, we got in a bit lower, waited for the real retracement back to equilibrium, which, if you notice, this 1 hour fair value gap was equilibrium. Now, yes, we tagged it and dropped through the floor, tagged it again, and continued on down with a liquidation. Now, with all that being said, we had some fantastic trades today. We had great setups, but the biggest success of today was we stuck to our strategies. We did not abandon it. We did not try to sidestep it. We did not try to make changes on the fly to our strategy. We stuck to it and stuck to our trades and called it a day. Now, let's talk about what are we expecting for tomorrow and the rest of the week. We have Powell speaking tomorrow. Lord have mercy on price action. All right. If you are a price action trader, buy. Like, between the hours of 12 and 12:30 tomorrow, I would not even look at your charts. I would go and treat yourself to lunch somewhere, or take a nap. It's not worth it. Your account, I promise you, will be gone in about 3 seconds. But we do see that we are needing to break the daily BIST low. So if you follow ICT concepts, the BIST is a buy side imbalance, sell side inefficiency. So we are inefficient in selling, or we were back here where we saw this huge run up, right? Right. Well, we broke through the consequent encroachment, and now we're coming back down. And now price is saying, well, about that, I'm going to take out all this liquidity down here, and I believe that we will even begin to come back and take out these relatively equal lows down here at 14.6. So I want to be very careful of what we do now, because if we look, and at a high level, this does look like the third and final leg. The third and final leg is usually one that breaks all lows. It's actually required to, before we get a correction wave. If you follow wave theory and Elliott waves. But I do believe that we are going to see some major lows coming in, and we should see a lot more to the downside. Now, could we see upside? Absolutely, we could, but we still have some liquidity to the downside that we need to come and take, right? Even if we look on the daily chart, we got some liquidity right down here to come back to. We got a lot of liquidity here. We're not done yet, but we do have a nice fair value gap up to the top and some buy side liquidity and a liquidity void to take. So for this week, I think we could potentially drop all the way back down a few hundred bars, but we also have the potential to come all the way back up too and kind of fake everybody out on the daily fair value gap. Both are possible, but I'm not going to ramble on any further. Dubs, Big Pockets, questions, comments, concerns. Let's hear it all.
I don't have any questions, not at the moment. I would like to see it drop a bit more, but just looking at the charts right now and going based off the 1 hour healthy order block, I personally don't have a single trade at the moment on the bottom section, not until it reaches at least 14,740 around that area. So at this very moment, healthy order block strategy is gonna be on a standby for a while. But if I do take any trades, it would be based on different either market structure shift or anything completely different, just based on what I'm looking at the moment. Unless tomorrow we see a major downside, and then at that point, different story.
Different story. I like it. I like stories.
Yeah.
So let's see which one we're told tomorrow and Friday.
Yep.
Yeah, my bias would be towards the downside as well, just based on the way things were trending today and based on the data that you laid out there, Quant. But you know, obviously we'll see. But that would be my thought. So
Yeah.
Absolutely, absolutely. And you know what? This is why we do the daily recaps. This is, just one of the multitude of reasons why, we like doing this, because things are going to change. And every day we get to lay out our bias, we get to lay out our thoughts. And I don't know, Dubster, if you're starting to see it, but I definitely am, that we are definitely trading in line with our bias.
About time, right?
I know it's about time. So, Big Pockets, a bit anecdotal, but previously, if you go back and watch our previous trading recaps, for a while we kept saying, why are we having like a downside bias and taking calls throughout and hoping for this huge run up?
for sure.
And we're taking calls and we're getting smacked.
Yeah.
Why are we doing this?
Yeah.
or it's like, yeah, you know what? We're super bullish, and the only plays we're taking are puts, or we're trying to trade against trend, and it's like, what are we doing? Why are we doing this?
Was in the same place. That's why I told you one of the things that's helped me a bunch recently, and the reason I've been having more green days is just taking less trades in general. You know what I mean? And kind of identifying my bias and being like, okay, so based on my analysis, I do have a bias to the downside. Let me look for opportune downside trades. You know what I mean? Instead of just jumping in and feeling like there's going to be some big reversal or something.
Exactly. And I truly feel bad for those who I am alerting these options plays to, because they're so used to setting my plays on a timer and
Right.
waiting for me to average down 2 or 3 times. Yeah,
Right.
I'm not at averaging down anymore. And it caught a lot by surprise. That they were just like, wait. I was supposed to get in back then?
Right. Yeah.
What do you mean it's
No, for
50%
sure.
already?
And it's way less nerve-wracking when you find the opportune entries, maybe you go down, 5 or 10%, but then it starts to go your way instead of like having to hold through these huge drawdowns and being like, okay, I'm going to try to protect it now with the average down because I still believe in it, but it's, you know, it's a lot less stressful if you do it the other way.
Exactly. Exactly. So you know what? It's been a wonderful ride. And so I'm just glad that we're not averaging down as much. I mean, don't get me wrong, the trades are so profitable. It was having to continue to leverage more than intended.
Yeah, exactly. You know, and I think, you know, ultimately what it means is your entries are getting better and you're in profit faster, which psychologically is just gonna, I think, is gonna help you to make more profitable trades. You know what I mean?
I wonder if there's a correlation, you know, between that and therapy and the number of therapy sessions someone has. You know, I'm curious, you know, if traders actually seek out therapy and the therapist, you know, at some point says maybe you should find better entries.
Yeah.
And it's like all
Well,
and like all these problems will magically disappear.
I'm sure. Well, you know, winning is a lot better than losing. So, you know,
Exactly.
when you're winning, it's easier to be in a more positive mindset.
Absolutely. And that actually brings up a very good point. So, big pockets and dubs. One of the things I would really like for everyone to work on, and I still have to work on this too, is losing well. Being able to take that loss and say, you know what, it's all good. On to the next one.
Oh yeah. Back testing has actually helped those emotions because you see how many losses go based on the strategy. So the point here is to like figure out why they were losses, what approach were the price action during that time doing. And it does help a lot. Accepting those losses, you'll hear me sometimes in life. I'm just like taking that loss, boys, and I'm out. But
Yeah,
I don't get very emotional about it. I take the loss and move on, you know?
It,
I think
exactly.
having rules around losses has helped me too. You know what I mean? Like if there's a certain there's a certain amount, or you know, it's like if I lose very small, I'll take more trades. But if I lose a certain amount, it's like okay, I need to reassess things, and I just stop. You know, and that's helped me not to like go on tilt, go back into like an even bigger trade, and go deeper in the hole.
I use like the Martin Nightingale problem where you lose, you leverage more. Because then if you win, you've already erased all your losses and gained profit. And I realized that's really stupid. That is really,
Yeah.
really, really stupid. But I totally agree. You know, that is something I too that you know I agree, and I have a similar process now that we can walk through in at a later time in another video where we can walk through how we handle losses. But it looks like we are at the top of the time. I want to thank both of you all for coming in tonight and sharing with us your strategies, your thoughts, comments, and concerns on the market and your trades